Now you take other people's expertise and you start to assimilate it into from their systems into your systems, and your whole life basically gets up leveled.
Welcome to the Wealth Strategy Secrets of the Ultra Wealthy podcast, where we help entrepreneurs like you exponentially build wealth through passive income to live a life of freedom and prosperity. Are you tired of paying too much in taxes, gambling your future on the stock market, and want to learn about hidden strategies for making your money work for you? And now your host, Dave Wolcott, serial entrepreneur and author of the best-selling book, The Holistic Wealth Strategy.
Hey everyone, welcome to today's show on Wealth Strategy Secrets. We've got another awesome show lined up today. Today we are joined by Mark Yegge. Mark, the wealth architect, has spent his entire life learning and teaching people about wealth and the importance of a successful mindset. He started investing when he was 12 and made enough to buy his first car at 16. Mark started and later sold his Wall Street software company, the company that ushered in after-hours trading. He then retired at the age of 39, but not before growing the company from nothing to a $30 million enterprise. Along the way, he garnered awards as Small Business of the Year, the Florida 100, and Inc. magazine's Fast 500. In addition to his achievements in business, Mark has authored books and courses, including Hacking Money, The Cash Flow Machine, Negotiate to Win-Win, The Secrets of Business, and others. Mark, welcome to the show.
Wow, thank you. I don't know if we have anything to talk about after all that.
Yeah, I know. I was going through here and all of these, I love the title of every one of these books. It's kind of what's on my brain every day: Hacking Money, Cash Flow, Negotiating to Win. I love it. So great job there. And, I hadn't realized actually that your software business, you exited that at 30 million. And coming from the tech space myself, I know that that's quite an honor, and not everybody does that. So congrats, and looking forward to the discussion.
Yeah, me too. It's gonna be a lot of fun. We've already had a chat, so a lot of this will be rehashing stuff. But let's make sure we give your audience what they need, right?
Yeah, 100%. So, why don't you tell, obviously we had a little bit of an overview there, but, what did you have an epiphany in life that, you wanted to get into, cash flow investing, passive income thesis, or, just tell us about a little more color to your background for people who aren't familiar with you.
Well, I mean, it depends on where we want to go, because I've had a few threads running through my life. One of them you mentioned early on there is when I started investing at 12, and my dad showed me how to do that at a young age, and I'm still doing it to today, right? I run 3 hedge funds and teach people about money and wealth and covered call strategies and things like that. The other one is business, right? I came from an entrepreneurial family. My dad was an entrepreneur. His dad was an entrepreneur. And one of the things that is the common thread between at least those two parts of my life is that you need to be a critical thinker, right? And that means that you need to kind of formulate your own thoughts. You can listen to the information that's out there, but I now, especially looking back now, I doubt basically everything I hear until I can prove it to myself otherwise, right? And so you've kind of got to figure out a way to kind of what makes sense to you. Like, does it make sense to you? Then great, but don't get sold into having it make sense to you. Really think about it. Look at all the angles and then decide for yourself what makes sense to you and what's the right thing. Because at the end of the day, it's not going to be the broker that has to live with it. It's not going to be, anybody else that gives you advice that has to live with it. You have to live with the decision you made yourself. And if you're always giving somebody else on the outside the ability to have the final say, a lot of times you have a lot of trouble living with that decision.
Sure. Makes sense. So do you follow a particular wealth strategy that you're really focused on?
Well, broadly, I believe in the concept of diversification. Broadly is the key word there, because, I think diversification is a strategy that's overused. And, they say that diversification is a free lunch. And here's what I believe about diversification, David. I believe that diversification is a fool's strategy unless you're diversifying among asset classes. So I believe that everybody should have some real estate, some gold and Bitcoin, some stocks, maybe even some fixed income investments. some business, right? So, owning some of these different types of assets, to me, that's diversification. But like Warren Buffett, I just read a statistic the other day that 78% of his fund, and he's been doing this for a lot of years, 78% of his fund is in 8 stocks. It's billions and billions and billions of dollars, all concentrated in just a few names. And so if that's good enough for Warren Buffett, why do we have the S&P 500 where we're getting representation of 500 different securities in our account? All we do is we take the really good ones and we bring their returns down by the really bad ones. So we average down our returns. And then if we pay somebody to manage that account, we've got to pay them, when everybody needs to earn a living. So that's fine. But if we're getting an average return and then we pay our broker, 1, 2, 3% on top of it with all the fees and all that stuff, we're over diversified. We're shooting for average, and then we're getting less than average because we're paying other people to do what we could do ourselves.
Yeah, couldn't agree more with that, Mark. And from my perspective, I think the biggest problem with diversification at a broad level like that is that you can't learn about asset classes. So you just named like 5 like excellent asset classes that a lot of, wealthy and ultra high net worth, right, that they focus on. I mean, typically family offices are in, operating businesses, real estate and alternatives, and some exposure to public markets, right? But when you're able to focus on a fewer asset classes, you can get smarter about them. You know when you can identify good deals or when something's bad. But when you're completely diversified against or across everything, you're right. You're just dollar cost averaging. You kind of going with the lowest common denominator.
Yeah. And one of the things I've also gravitated to now, in the last, decade or so, is the importance of cash flow. I heard this when I was running my business, and it wasn't until I had to lay off 8 people, it was a really difficult thing for me to lay off 8 people because these people were like my family, but I was getting reports from my CFO. Oh, everything's fine. Everything's great. But we use this accounting thing called accrual, which basically means, these people owe you money. So your reports look like you've got the money, when if they don't pay you the money, you don't have it. You can't make payroll. And one day I got a warning that said, we're going to have trouble making payroll. I'm like, wait a minute, you just told me that we made $250,000 this month. What are you talking about? Oh, but that's accrual. And I didn't really know what the heck that meant. This was a long time ago. And so I was schooled by the School of Hard Knocks really quickly that you've got to learn accounting, and you've got to learn to, to think critically, like I mentioned before. But having to lay those people off was a really, really difficult thing. And so, as it's gone now toward I'm in my 50s, I realized that cash flow is so critical. And so I have a program called the Cash Flow Machine, which teaches people how to take the stock market and sell calls. It's covered calls essentially, but it's a modified covered call strategy. And we create income from those assets. So it's like owning a house, right? You buy a house and then you rent it out, and you don't care if the house goes up or down in value too much. You kind of just care about making sure that you have that tenant paying you every single month, and he eventually will pay off that house for you. And same thing with apartments, same thing with the strip mall or multifamily, whatever. Cash flow is king. And I heard this really early on, but it didn't hit me until that first experience I had with my company. And then now that's kind of what I preach. It's like, and look, here's where I get some of that experience. I've owned a lot of land, and I love real estate, but I hate real estate, right? It's important to have in your portfolio, but I've had to clean toilets at 2 o'clock in the morning and change out the heaters and ovens, and so it's not passive income. And I have a feeling that there's not a lot of real passive income. You got to pay somebody to manage it, and if you're at that level, then it kind of becomes passive. But most other income is semi-passive. So I have real estate. I have the Cash Flow Machine, which is my income producing asset, but it requires 20 minutes to an hour a week. So, but at the end of the day, what's important? If you own land, which I also used to and still do, that doesn't produce any cash flow. So I look at that land kind of almost as a liability because it doesn't really bring me in any cash flow. So cash flow to me is really, really important in investing.
Yeah, so I'd like to just rewind for a second and unpack the critical thinking a little bit more.
Yeah.
It's interesting. Keith Cunningham was actually Robert Kiyosaki's mentor,
Yeah.
right? And he was a huge proponent of thinking time. And we're part of a strategic coach program as well. And so Dan Sullivan likes to call it thinking about your thinking,
Yep.
right?
Think about your thinking.
And it really is the way of the future, right? Because, we live in this world where, there's so much information and data coming at us all the time. Like, how can you possibly process that? The human mind has like 60,000 thoughts per day that are going through your mind, right? So if you don't actually have the time to be able to process that and figure out, what makes sense for you, what you're going to implement, what you're going to go after, what you're going to focus on, that's really core. And I've been trying to teach my kids that as well, right?
Yeah.
As they kind of go out into the world, is like, you need to become a critical thinker. You need to become a great problem solver, right? Because these are really the skills of the future. So it's great that you focus on that. And then I know that you're also a big proponent of having, a strong mindset. So, what's your perspective on mindset with that regard as well?
Yeah, great. I mean, and you said a couple of things that I want to talk about too, and it relates to mindset, because in investing, mindset is about 90% of the game. Like, you can learn all the MACDs and all the different fundamental analysis, technical analysis, but at the end of the day, it comes down to your mindset and emotions. And if you're emotional and you're investing, I don't know about you, but I make horrible decisions when I'm emotional. And I make pretty good decisions when I'm logical, not always, but I think when emotions go up, intelligence goes down. But like you said, there's a lot of thoughts that come into our head every single day, and 99% of them are the same thoughts that we had yesterday. So if we're not using what Dan Sullivan calls the 3 different kinds of days, free days, focus days, and buffer days, to really sit down and think about our thinking, all we're going to do is repeat the same stuff. Maybe they even had mistakes built in because we didn't critically think from the day before. So we have to really think about our thinking, and we have to focus on mindset, and you have to have some type of parameter around how you think about wealth and money, and maybe even the rest of your life, right? Because I believe that life is a formula. If you do X and you add it to Y and you get Z, well, that's a pretty repeatable formula. If the X and the Y are the same, you're usually going to get Z. But so often what we do in our lives is we wing it. We wing our relationships. We wing our health. We wing our money. We wing our time. And we'll sit there and we'll scroll and I'm guilty of this, just like the next person. We'll scroll on a Twitter feed, and pretty soon we realize there's an hour of our day that's gone. Or we'll binge watch a Netflix show for 5 hours, and we'll realize, oh my God, there's somebody that's writing a book. How can he write a book and I can't? Well, if you realize how much time you're taking, not thinking about your thinking, not focusing on what your outcome, what desires that you want to have in your life, then I think you're kind of left to the whim of the wind, right? And so I think what we have to do is we have to step back, slow things down, because we have so much coming at us these days, and really create systems around what we do, because systems have rules and parameters that allow us to repeat those formulas into the future. And if we learn from people that have gone before us, that have already created something, so when you get those awesome systems, if you can learn from them, implement them, and change your mindset about them, you can catapult your way forward. That's kind of the way I look at it.
Yeah, we talk about wealth strategy, right, in our practice. And then we believe that really the formula, so speaking about a formula and a system, is that, yeah, building wealth is actually a process, right? So just like if you were going to sign up for doing an Ironman, right, you wouldn't get to the outcome right away.
Yeah.
You'd have all kinds of different training regimes. You'd be focusing on your diet. You'd be doing work every day for, potentially a couple of years, right, to actually get to the outcome. So it's kind of putting it through that. But I believe, in my experience over the past 20 years, is really a formula that consists of wealth is equal to your financial IQ plus your mindset IQ plus your physical capital plus your relationship capital.
Beautiful.
right?
Yeah.
And that's how all of these things can really come together and compound, and then you put them into a strategy to really get that snowball effect.
How do you measure those, Dave? I love the fact that there's a formula for it. How do you measure some of those individual components?
So it's fascinating that you ask that, right? And this kind of goes back to, I mean, some other concepts, right? Dan Sullivan has, right, around the four freedoms, right? Trying to understand freedom of money, freedom of time, freedom of purpose, and freedom of relationships, right? And so some of these are a little bit softer, right, to measure some of these things. But, from a wealth perspective, folks in our mastermind class right now in family office, we are literally documenting the ROI from going through this process. So everything from the tax savings that you have, identifying new relationships that created a new opportunity that could, 10 times your investment, right? So things like that. And I think when you kind of focus on some of those metrics and where you're going, and if freedom is important, because I think if you ultimately really think about wealth, like at the next level, that's what people are really looking for, right? It's to achieve those freedoms, and then also to minimize, your fears, creating financial security around that.
Yeah. I just got off of 2 cruises. I did 2 cruises back to back because where I base sometimes is a little bit cold here in North Carolina. And so I decided I wanted to go to Florida and maybe go down to the Bahamas. So I booked 2 cruises back to back. And when I got back, people are like, "Did you have fun?" And I'm like, when most people go on cruises, they go to have fun. They drink, they get in a hairy back contest or whatever it is, right? And they sit out in the sun until they get burned. That's not what I do. I can kind of do my work anywhere I am in the world. And so for me, it's just a floating hotel room. And I just was in the warmth, and I was, among some cool people, and I had a beautiful view. And I'm taking a transatlantic cruise next week to Rome from Florida, and it's 2 weeks. And to me, that is the kind of freedom that I like to have. So to me, it's a little bit of location freedom and time freedom. And most people don't realize how much freedom they give up by the choices they've either made or haven't made. And I made this choice 5, 6, 7 years ago where I said, look, I don't really need to have all the stuff, right? I've had all the stuff. I don't need to have it. I really would rather have my relationship freedom, my opportunity to be with really great people and share some really great ideas, deep ideas that make me better as a human, and then travel around the world and do it and learn, than have to be stuck paying off a car, paying off an airplane, whatever the story is, the house. And that's the kind of freedom that I think we give up when we put these chains around ourselves, by trying to comply with Western ideas and Western culture. So for me, and it's not for everybody, for me, it's location and time freedom that is important. And that's it's wealth allows me to attach that and attack that.
No, that's so valuable, Mark. And I think it's hard, right? Because we're inundated everywhere we go, whether it's, social media, and it's coming from multiple places. It's coming from the government. It's coming from corporate America.
Yeah.
It's coming from, the typical $30 trillion financial services industry. There's so many things that are trying to get you to think a certain way, or, you need that car because, it's going to be great, right? And you're keeping up with the Jones and all of those kind of things. But in reality, the way you just defined it, right, I think is, if you look back on your life, what is really the contribution that you want to really make and leave behind, right, as a legacy? And I think it does revolve around, these freedoms, these multidimensional freedoms.
Yeah. How much of an impact can you make on the world? And by being free to allow your mind to go where it needs to go, it allows you to be able to help the world. So for example, in my stage of life, I didn't think about this when I was 30, but now in my 50s, I'm thinking, how am I giving back? And I really think that I was put on the earth to help people understand cash flow. And that's what I do in my program. I'm trying to help a lot of people. Getting the word out is a different part of it, but that's how I can help people. And I think that, being able to live that life affords me the ability to have people look in on that and say, you know what, I might want some of that. And maybe you have a lifestyle that people might look at you and go, I want some of that. How can you help them get it?
Yeah, for sure. I think Peter Diamandis calls it your massive transformational purpose, right? So,
Exactly.
when you can zero in on what that is, it's really powerful. So Mark, let's jump into some tips here, I think, for the audience, right? So people can, learn a little bit about cash flow. And again, I, really enjoying this conversation, right? About a deeper level of thinking about, what some of these things mean, right? Because I think this is ultimately what we're all looking for. It's not just a particular product or, one-dimensional kind of solution, but it's like, what does that really mean? And I've found through my journey that, managing cash flow is, very interesting. When you're running a business, you're looking for recurring revenue, right?
Sure.
Same thing. You want that revenue to show up. And what does that mean? It means predictability in your business. It means that, you're not going to have to lay off 8 employees, right? As you go, is that you can kind of put the building blocks in place to start to, scale your business, having that kind of cash flow. And then on the personal side with your investing, like you talked about, you've got these other multiple streams of income that can kind of support your lifestyle and some of the things that you're trying to do. But I think there's a lot of nuances around cash flow. And, look, we're 2 weeks after seeing, the collapse of SVB Bank, right? And, there was even exposure in the banks, right? So even how do you, once you have cash flow, how do you manage liquidity? Right. So that it's, you're staying ahead of inflation, but you've also got that safety. So, what are your thoughts from that perspective?
Well, I just read a report that there's 200 vulnerable banks. I think the whole fiat Ponzi scheme, if we're really getting, tinfoil hattish here, or maybe even realistic, I don't know what it is, but I can tell you that every Ponzi fiat system, monetary system in history, and I've studied 700 of them, they've all collapsed. And I don't think the banking system that the Europeans are using, the Japanese are using, the US is using, anybody is using based on fiat is going to survive. And with this information age that we have, the sharing of information makes things happen quickly. So there was a risk at SVB, Silicon Valley Bank, that there was going to be, you weren't going to be able to make your payroll. If you were one of those Silicon Valley companies that had to write $250,000 worth of payroll, and you got wind by a Twitter or some kind of social media that your bank might not have that money, you went and got as much money as you possibly could. And there was a run on the banks. It's no different than the run on the banks that we had in the 20s and 30s, except that it's quicker. And so I think we have vulnerability in our banking system. And that means that, number one, savings is dead. Like, you're not going to keep I'm moving money around like crazy right now just to try to eliminate my risk, even though there's supposedly this FDIC that's going to cover up to $250,000 and probably up to infinity now. But so what? If they cover everything, then that money is going to be worth very little in buying power. So to me, you've got to be in hard assets. What are hard assets? Well, things like real estate, things like gold. For me, it's Bitcoin. Whatever it is for you, but you can't have your money sitting in savings, even though the banks are now trying to tick their savings up from 0.25% a year to maybe 1%, which is not getting ahead of inflation. You can't keep it in. Forget about savings. If you keep your money in the bank or in cash, you're not going to be able to buy as much next year as you can buy this year. So what does that give the average person incentive to do? Go out and spend money. So we get into this spiral of spending more and more money and saving less and less. So our investments don't grow because we'd rather spend the money. Most people are spending it on trucks and things like that and not putting it into investments. So you've got to still invest, but you got to invest in some assets that are going to appreciate faster than the rate of inflation. That's critical.
Yeah, totally agree. Right. And when you can understand that is the formula, right? It's actually does multiple things, right? So when you're buying assets, especially tax efficient ones, you're offsetting, the income that you've actually just made.
Yeah, critical.
And then you start to grow your passive income, right? And you widen that base that you have. So your passive income continues to grow at the same time your asset portfolio is growing, right? And then, that really starts to become exponential. Do you have thoughts, Mark? I know there's a lot of different thoughts out there around, liquidity, capital reserves. Do you have some SOPs or guidelines around even in your personal economy on keeping, 6 months of emergency fund and 6 months of, dry powder for the next opportunity, or how do you manage your liquidity?
That's an interesting question. I used to teach this concept when I used to do live seminars on money management. This was years ago, but I always called it have enough money that you wouldn't lose sleep if you lost your job or your source of income. And I call that your sleep money. How much sleep money do you need? For some people, they have a higher risk tolerance. That's probably under the category in which I fit. I don't need quite as much because I believe that I can go out and create money. But if you're somebody that doesn't know how to do it, if you get laid off, what's going to make you feel comfortable until you get another job? That's a critical question you have to ask yourself. So I don't have a rule of thumb on it. For a lot of people, it's 6 months of money, 3 months of money, whatever it is. You kind of got to figure it out for yourself. But what's going to help you sleep at night? And sometimes I get a little bit over invested and I don't sleep well. So even I believe everything should be in an investment. I have very little cash sitting around because of the prior concepts that we talked about. So I've got everything invested and it's invested in cash flow. So I've always got a source of cash coming in for me. So.
Right. And this actually comes right back to mindset too.
Yeah.
Right. Because if you have a scarcity mindset, you want to stockpile all this cash. And if you're listening to a lot of the media outlets and everything today, we're worried about, the collapse of the banking system. We're worried about, the war in Ukraine, other geopolitical events happening all over the world. And it can start to actually consume your brain and your mindset the way you think. So it just fosters that, scarcity. And we want to really be living an abundance mindset. So as you pointed out earlier, it's, if you have developed a capability that you know how to actually generate, money, then you can always create it. And whatever form that's in, right, you can always do it.
I just before we got on the call, I went to the eye doctor. So you might even see my pupils are dilated right now. I don't even know. Can't even, you're just a fuzzy angel looking guy right now because you got all this aura around you because my eyes were dilated. But I was talking to the young doctor who just got out of school, optometry school, and we have a conversation. She asked me what I did and she said, "Can you help me?" And we started talking. And the first thing that she did, because she wasn't trained in money, she was trained in medicine, right? But not in the thing that she uses every day, money. She says, "Well, I'm just trying to pay off my student loans." And I said, "Hang on a second. What's the interest rate on your student loans?" And she kind of mumbled. I mean, she gave me the idea that she didn't really understand. I understand what they were. And I said, "Well, give me a range. Is it between 1% and 5%, 3% to 8%? She goes, "Well, it's probably around 5%. She was guessing. I said, "Well, how much would you have to go and, if you wanted to get more money to do something else, buy a house or whatever, what would the money cost you?" She says, "I don't know." So we had a little education session, but the bottom line was, number one, she didn't know. And number two, the mindset around thinking about paying off your debt when it's cheap money to go out and get more expensive money is one piece of mindset that was just some low-hanging fruit in one conversation. So how many of those things do we have in our lives that we just don't know the answers to?
Yeah, 100%. So Mark, tell us a little bit more about your specific cash flow machine. How does the business model work?
Well, thanks. I mean, it's one of the plugs into the outlet of a whole investment strategy, like I alluded to at the top of the conversation here. But to me, it's the best system that I've ever found, and I've been investing on Wall Street for 45 years, that I've ever found to create fairly safe, conservative income. And that's kind of what I'm shooting for now, because income does two things. It plays defense because it lowers the basis on your stock price. And it also plays offense by giving you income, right? So it's an income and growth strategy is the way I look at it. So to simplify it, it's based around covered calls, which basically means you have an asset and you sell somebody else the right to buy your asset at a predetermined price. So let's look at it like, well, most people can understand real estate. So if I have a a lot across the street. I look outside and I see that the lot is for sale across the street for $100,000. If somebody else is driving down the street and they hear a rumor that that lot is going to be worth $1 million because Hilton's going to put up a big old, resort there, but they don't have the $100,000 to buy it, they can go to the owner and say, look, I'll give you $10,000. Just hold it for the next 6 months and sell it to me for $100,000. And so now what could happen? Well, the developer could come in and develop that property and it turns into $1 million, in which case the person with the $10,000 option goes and exercises it, makes $1 million out of it, right? So that's a nice high risk. But what most of the time happens is that was just a rumor. They're not going to put a hotel there. And that $10,000 went to the owner because that person said, I'm going to give you $10,000 to take it off the market. And so the person that took it off the market takes the least risk. When the person defaults on the option because the hotel doesn't go up, the person that was selling the home, or selling the lot, I should say, keeps the $10,000. So it's kind of the same thing with stocks. So if you have a stock, let's call it Amazon or Tesla or Apple or whatever, you can give somebody else to right to buy your Tesla at any price, and they pay you for that. 80% of the time, the people that buy the option, just like the real estate example I gave, 80% of the time, those options expire worthless, which means that 20% of the time they're worth something, but 80% of the time they're not. But on the other side of the transaction, when you sell somebody the option, that 80% figure is kind of on your side. So what we do is we just take an asset in the stock market and we create income on it every week or every month. And we shoot for about 2 to 4% a month. And we frequently get it. And it's fairly safe because if you own Amazon anyway, why not sell somebody else the option to buy your Amazon? And if it doesn't go above your price, you get to keep their money. So that's what we do.
Got it. And so is there a who, not how involved in this, or do you have to learn the strategy and execute yourself?
Well, I mean, there's a lot of who, not how ways to look at it. I run a couple of hedge funds for people that are busy and accredited and don't have the time to do it. But a lot of people are just, I don't know, they're tired of giving. I have a saying, right? Never give up your power in your health, your wealth, or your time. And a lot of people over the last several years have given up their power in their wealth, and they haven't really done too well. And at least if you're not going to do too well, don't pay somebody else to do that, right? You might as well learn a strategy and a system. And so that's what we do. We have a program, it's called the Cash Flow Machine. And it's not just a course. We have a full ecosystem around it, a mastermind community, chat groups, a support group to help you get through some of this knowledge that you're going to go through in the beginning. And then as you go through the different cycles in the market, you learn more and you learn more and you learn more, and then you can help other people that are learning it for the first time. So yeah, the basic who there is most of the time people want to take control and learn how to do it themselves. And that's what we're here for.
Yeah, makes sense. Any other Wall Street axioms that you believe are kind of holding us back?
Oh my God, how much time you got?
How about give us your top 3?
All right. Well, I heard one yesterday called "You Never Go Broke Taking a Profit," and I grew up with this one. My dad always taught me that. He goes, "Mark, when you're in a profit situation, you take the profit. You'll never go broke." The problem is that's like saying that you're growing an apple tree, and as soon as you see the bud come out of the tree for the fruit, you pick it. You can't really do much with you're not going to eat it because it's probably still bitter, but it'll never grow into the fruit if you pick it. Or the same thing with the flower. If you just pick the flower as soon as it's starting to open, you'll never get the full flower. And so you have to let investments mature. And so often what we do is we're so afraid of losing our profit, fear, that we take it. And sometimes those are the stocks that went way up. So for example, just ask yourself, how come you still don't own Apple from 2003 or Amazon from 2010? Or Microsoft, between 1983 and now, right? Why don't you still own it? Well, most people don't. Most people have never been in Amazon for 30 years or Apple or 20 years or Microsoft for 30 years or Apple for 10 or 12. They get out because there's a profit. And the mindset, back to that, Dave, is I need to preserve my profit, because you never go broke taking a profit. But if you never take the profit, you'll get to appreciate and all that upside. And most people don't get to do that. So that's one big axiom that you've got to kind of deprogram yourself, because it makes sense, right? You never go broke taking a profit. When you do the numbers, you go, oh, that makes sense. So that's the first one. The second one we talked about is diversification. And the third one is, another one is safe money, right? You want to have the 60-40 portfolio that everybody's been talking about for the last 15 years, right? You want to have 60% in equity and 40% in fixed income bonds or whatever. The bonds are your safe money and the equity is going to allow you to grow. Well, last year in 2022, the bond market went down 25% and the stock market went down 25%, and they're supposed to offset each other. And they didn't do that. And so people ended up losing a lot of money last year. Hey, some of my accounts went down as well. But if you had the belief that your money was safe and you lost 25% while you were getting 2% interest, well, that really doesn't serve your interest. So you've got to watch out about those words, safe money, diversification. You got to really think about the thinking there, what they're worth and what they mean, because sometimes they lead you astray. So that's probably three good ones right there.
Yeah, good insights.
Yeah.
And if you could just give one piece of advice to our listeners about how they could really accelerate their wealth trajectory, what would it be?
I would say it's learning. So I'll give you a story. A couple of years ago, a friend of mine posted at the beginning of the year, he goes, who's up for this challenge? Do 100 push-ups a day and watch one TED Talk a day. And I was the only one that raised my hand. I said, I'm in, right? And at the end of the year, I had to catch up because it was like the 7th of January. So I had to catch up like 700 push-ups to be on par with it. And I'll tell you, the first few days, it's tough to do 100 push-ups. Like even if you're doing 10 at a time, spacing them out. But after a week, then you start to do 20, and then you could put together 30. And actually, I saw an amazing amount of transformation in my life when I did it. If you look back at the end of the year, which I did, I'd done 36,500 push-ups, right?
Wow.
And I'd watched 365 TED Talks, averaging about, let's say, 15 minutes a piece. That's a lot of learning, right? That's a lot of opening up your brain to different fields of thinking that all can kind of integrate into what you're doing, whatever you're doing. If you're in medicine, if you're in engineering, if you're in law, if you're in money. Now you take other people's expertise and you start to assimilate it into from their systems into your systems, and your whole life basically gets up leveled. So I would say, if I had to boil all that story down into something, it's keep pushing, keep learning, keep growing.
Awesome. Love it, Mark. And if people want to learn more about you or connect, what's the best place to reach out?
Best place is to just go to my website, cashflowmachine.io. So it's cashflowmachine.io. And, we have lots of resources on there. You can get a free resource called Regular Paychecks, how to take regular paychecks out of the stock market. It goes into more depth about what I tried to explain there a few minutes ago about how you can get that income out of the market. But that's where I would just say, you can find me on Twitter at Mark Yegge. I'm also known on YouTube as the Wealth Architect. So you can put in Mark Yegge Wealth Architect and find all my videos on YouTube as well. And I have a podcast called the Wealth Architect Podcast. So
awesome. Mark, really appreciate you coming on the show, sharing such valuable insights for the audience. It's always a pleasure to connect, and we'll look forward to the next time.
Let's do it again soon. I appreciate it, Dave.
Right.
Thanks.
Thanks, Mark.